Guys, this is S&P 500 weekly technical analysis for the week of March 6, 2023. That is from March 6th, Monday to March 10th, Friday. So the first thing first, Monday, Tuesday, Wednesday and Thursday, we have achieved an accuracy of around 95-96%. Now on Friday, things did not work as they were supposed to be. So what we knew last week, this is the previous S&P 500 weekly technical analysis. So what we knew last week, we knew that the S&P 500 is going to come down to hit 3933 or 3923. However, as soon as it hits the 3933, now it will be free to get a bullish reversal. And because the cloud itself, it acts as a strong support. And other than that, the cloud, there was our calculated the support zone at 3937. So these two factors, the cloud as well as the support zone, and then we have seen a reversal on Thursday. So Monday, Tuesday, Wednesday, Thursday, it went well, okay, as was expected and predicted. But we are concerned about the Friday because whatever has happened in the Friday, it has happened on purpose. So the market manipulators, they came into the picture and this thing has happened on purpose. And this has happened because the market manipulators, they were in a little rush. They were in a little hurry. So now there are the two questions. Number one, that why the manipulation has happened. Number two, why the market manipulators are in so much rush or are in so much hurry. I'm going to discuss this thing in detail. In this, the S&P 500 weekly technical analysis, that why the manipulation has happened, who has caused the manipulation. Number two, that why the market manipulators are in rush or are in hurry. And guys, one more thing, that last week in my previous S&P 500 weekly technical analysis, I clearly mentioned this thing that on Monday, 100% there will be a bearish crossover in the moving averages. It was there. Number two, I mentioned that once it comes down, it hits the Ichimoku cloud, then there will be a reversal. There will be a bullish reversal. Bullish reversal to what? Bullish reversal to retest the moving averages. Although it was manipulated move, okay, fine, but it has retested. Okay, so these things were in the picture, and we knew that this will happen, that this has to happen technically. Now comes the second part into the picture. Recently, I have uploaded this S&P 500 monthly technical analysis, and in that technical analysis, I have mentioned that in the month of March 2023, we can expect the movement in the S&P 500 from the zone of 4035 to the 3585. So as such, the S&P 500 should not move beyond 4009. Okay, but if that happens beyond 4009, then we have the zone of 4035. So the movement from the 4009 to the zone of 4035, it will be through the manipulation and a very little help from the other indices. That's it. Okay. Now there is nothing beyond 4035, means the zone of 4035. What is the zone of 4035? It is from 4025 to 4045. Okay, this is the plus minus 10 points. So I mentioned this in my final update to my YouTube community members that it was a rough day after 4 wonderful days because we have made back-to-back profits in last 4 days. And again, to my YouTube community members and to all, that it happens sometimes, okay, but no need to lose your heart, no need to panic, no need to fear, because this is not the end of the world, right? And we will get ample of opportunities, see, market manipulation, it happens for a day, 2-3 days, okay, that's it, okay, not more than that. So 80 to 90% of the times, the entire stock market, it works through the technicals. And 10% or 15% of the time, the market manipulators, they come into the picture and they manipulate the market, okay. This is there for last many years, decades, and this is a standard practice in the stock market. Okay? But the good thing is that during that 80 to 90% of the times, okay, we are able to capture maximum of that part. Okay, these are the profits, right? So the good thing is that this week, okay, 4 out of 5 days, everything went as was expected and predicted. So once again, as soon as the manipulation is over in next 1 to 2 days, okay, then the entire stock market will realign itself to the technicals. So just one last thing to my critics, that I have disappointed you in last few weeks, okay, because the S&P 500, it was moving as was predicted. And because of that, we have recently seen, okay, there's the 600% profits, okay, and the 500% profits. But on Friday, yes, I agree that the S&P 500, it did not work, okay, as was predicted. So this is the Friday, okay, it is your day to criticize, and but I'm thankful to you that because of your criticism actually helped me to work harder to refine my analysis and to give more accurate movements to my YouTube subscribers and my YouTube community members on the daily basis. And if you notice that month on month, I have improved my the S&P 500 technical analysis, but still learning is a continuous process. Okay, and this is a stock market, and this is the stock market, and every day something new happens. Anyways, guys, so once again, if you have not subscribed to my YouTube channel, then please subscribe to my YouTube channel and click on the bell notification icon. And also, if you want the daily analysis, the daily updates of the S&P 500 from Monday through Friday, each and everything, then you can join my YouTube community. I have given the link in the description and also in the comment section. Now, guys, let's discuss the agenda of this S&P 500 weekly technical analysis. And the agenda, the first point of the agenda is the S&P 500 technical analysis on the weekly chart. Okay, weekly chart means there will be one candle will represent 1 week. Okay, and one more thing that the weekly chart means a hawk eye view. Hawk eye view means that we will see that on the broader chart. Okay, what is happening and what is expected to happen in next few days, few weeks, okay, or a month or so. Okay, so this is the broad picture, the big picture, the weekly chart. Okay, then comes the second point of the agenda, and the second point of the agenda is the S&P 500 weekly support and resistance levels. So just like I mentioned this thing that whenever it comes down, okay, it will be 3933, okay, or 3923, and then there will be a reversal from from this zone, and that maximum that we are anticipating, okay, is the 200 day EMA as well as the retest to the moving average. So we will discuss this thing in detail. Now comes the very important part. Okay, the third point of the agenda of this S&P 500 weekly technical analysis. And this the third point of the agenda is the manipulation in the stock market, its cause and purpose. So at first we will discuss that why the manipulation has happened. Okay, what was the reason? What was the cause? What was the reason? Okay. Then we will talk about the second part, okay, that is the purpose, that why actually the manipulation has happened, then for how long this manipulation will be there in the entire stock market, then the after effects of the manipulation, and then why the market manipulators are in so much rush or are in so much hurry that they manipulated the premium stocks like Apple. Okay, primarily it was the Apple that was responsible for okay, for the heavy movement in the S&P 500. Okay, and as well as in the Nasdaq. Okay, so they have manipulated the Apple heavily. So we will talk about the Apple anyways. Then comes the fourth point of the agenda, and the fourth point of the agenda is the S&P 500 technical analysis on the daily chart. Remember, this was the weekly chart. Weekly chart means the big picture. Okay, the hawk eye view. Then comes the daily chart. So the daily chart means that we will see that what the technicals are saying on the daily chart. Okay, Monday, Tuesday, Wednesday, Thursday, and Friday. Okay, but this daily chart, okay, it will give you an idea about the probable movement for 1 to 2 weeks. Then comes the fifth point of the agenda of this S&P 500 weekly technical analysis. Okay, and the fifth point of the agenda is the probable movement of the S&P 500 from March 6th, that is Monday, to March 10th, 2023, that is Friday. So last week I mentioned this thing that 100% there will be a bearish crossover in the moving averages, and any reversal, any bullish reversal intraday, okay, it will be limited, it will be suppressed, and then the S&P 500 will come down until it hits the 3933 or at most to 3923. Once it's there, then there will be a bullish reversal. This bullish reversal will be limited to the 4009, the 200 day EMA, and also at the same time it will simply re-respect or retest the moving averages. So this is a normal process. Okay, nothing new. So this movement, the heavy movement yesterday in the entire stock market, okay, that was manipulated. Okay, that we know. But if you notice that last week what was predicted, okay, it has moved like that, right? So similarly, I'm going to discuss the same thing again, that what we are going to expect in the S&P 500 in the coming week. Okay, the probable movement, what will happen on Monday, what will happen on Tuesday, then Wednesday, Thursday, and Friday. Okay, day to day, okay, what we can expect. what will be the upper limit, what will be the lower limit, okay, where it can retrace, okay, where it will bounce, okay, means so these things. So this is the probable movement of the S&P 500 from March 6th to March 10th, 2023. And guys, there is one more thing, that this S&P 500 weekly technical analysis, it will be a bit lengthy, which is why, okay, I have made these the sections, these sections in this, the S&P 500 weekly technical analysis, okay, so that whichever section you want to watch, you can watch. Whichever section you want to skip or rewatch, you can skip or rewatch. Okay, so this is just for your convenience. These the sections are there. So guys, before I discuss the S&P 500 technical analysis on the weekly chart, there is a disclaimer to this S&P 500 weekly technical analysis. Number one, that this S&P 500 weekly technical analysis is not a financial advice in any form or in any manner. Number two, that this S&P 500 weekly technical analysis is not an advice on the trade setup, that buy on this level or short on this level. No. Although I agree that whatever, okay, levels, okay, I mentioned in my S&P 500 technical analysis, okay, highly likely S&P 500 is going to act, or is going to give a reversal, or is going to do, something, okay, on these levels. But still, okay, this is not about, okay, this is the trade setup. Now guys, let's discuss the first point of the agenda, and that is the S&P 500 technical analysis on the weekly chart. Let's move on to the weekly chart. So guys, we are here, and this is the first point of the agenda, S&P 500 technical analysis on the weekly chart. Let me write it down. W as in weekly, okay, weekly chart. Now weekly chart means that the one candle represents 1 week. One candle means 1 week. Remember, okay, not 1 hour or 1 day. One candle means 1 week. At first, let's talk about the candle itself. Okay, it's a bullish candle, clearly. Okay, it's a bullish candle, but the special thing about this, the candle, is that the closing was almost the high. Okay, closing was almost the high. However, the closing was in the zone of 4035. Okay, that is another point to consider. So what it indicates? This indicates that on Monday also, initially, okay, either we can expect, okay, a gap up open, or we can expect, any kind of, or irrespective of any open, we can expect, okay, a little bullish movement on Monday. Okay, irrespective. So even if for some reason, even if, okay, there comes there's a gap down open, then also immediately, okay, it will try to give a bullish reversal. For example, if there comes like 1% gap down open, remember that this was a manipulated move, which is why, okay, a gap up open is not 100% confirmed. Okay, if this would have been a technical movement, then the gap up open, okay, it was 100% confirmed. This means that, okay, a gap down can also happen. Now, how much there will be this the up and down, okay, it is not known, okay, as such, because there is the weekend, Saturday, Sunday, okay. We can expect that there will be a bullish movement initially, okay, even if it comes like 0.10%, okay, then also, okay, a bullish movement there will be, okay, on this on Monday, okay, but this will be more clear on the daily chart. Okay, as of now, this candle is simply signifying that there is, or there, okay, we can expect, okay, a bullish movement, okay, on Monday. However, there is one more thing to this the candle, okay, that you should notice, that this candle has failed to breach the high of the previous candle. The high of the previous candle was 4052. Okay, so it has failed to close and breach. Okay, the high this candle made on Friday, it was 4048, which was below 4052. Okay, this means that technically any upward movement is expected to be suppressed. Okay, because it failed to clear this the previous the high of this the previous candle. Okay, in any form. I'm not talking about the closing, okay, but also about the breach and intraday breach. Okay, there was so neither there was a breach, okay, nor there was, okay, any kind of closing. Okay, so we will talk about this this thing, okay, in more detail in the fourth point, okay, and also in the fifth point of this the agenda. Okay, so this is with this the candle. Now let's see what the technical indicators are saying. So when we look into these the technical indicators, at first, okay, there comes this the Bollinger Bands. This is the median of the Bollinger Band. This is the upper band of the Bollinger Band. S&P 500 on the weekly chart was able to close in between the upper band and the median of the Bollinger Band. Once again, okay, this means that through the Bollinger Bands, S&P 500 on the weekly chart is bullish. Yes, it is bullish. Okay. Now comes the moving averages. So moving averages are in the bullish trend, and because see last week it closed below the moving averages. Okay, so there was a neutral. There's the neutral signal through the moving averages. There is this but now the closing of the S&P 500 is above these the EMAs, okay, or the moving averages. Okay, now this is all aligned bullish. This means that through the EMAs, through the moving averages, okay, S&P 500 is bullish, right? Two things. Now comes the Ichimoku cloud. This is again going to play a very important role, okay, in this the movement of this S&P 500. S&P 500 has clearly closed below the Ichimoku cloud, and it is bearish and is in the long-term bearish trend. Plain and simple. So recently in my S&P 500 monthly technical analysis, okay, I mentioned 4,100. So the reason behind that was that why the 4,100? The reason was that we have the Ichimoku cloud, okay. Ichimoku cloud can permit. It can or it may permit, but this is not necessary and this is not 100% confirmed, okay. This can or this may permit a movement up to 4,100. However, once again, let me clear this thing. Anything beyond 4035 means not 4035, but the zone of 4035. Zone of 4035 is from 4025, okay, to 4045. And if you have subscribed to my YouTube channel for last many weeks, months, okay, then again and again I mentioned the zone, and this zone has really worked very well, okay, again and again. So this is the zone, okay, the zone of 4035. Anyways, so Ichimoku cloud, okay, bearish. Now let's talk about some other technical indicators. So we have the the MACD. So MACD. So until last week, the signal of the MACD, okay, it was negative. It was negative. Okay. Now this week, through the heavy movement on Friday, especially on Friday. Now, especially on Friday, what has happened is that through that the heavy movement, the signal, okay, it is now from negative to positive. It has changed from negative to positive, okay, because the MACD is already positive, okay. Now the signal has also turned positive, okay. Now technically it is supporting a bullish trend. See guys, I am not going to lie to you, okay, and I'm not going to say that no, this is not happening. No, okay, this is happening, okay, and there is a change in the technicals, okay, and we are clearly seeing, okay, this thing here. So by manipulating the entire stock market yesterday, okay, on Friday, they have altered the technicals, and also they have achieved, okay, many goals, okay, through just through one candle, okay. This is what we are going to discuss in the third point of the agenda, right? Anyways, for now, through the MACD, S&P 500 is bullish, okay. Now comes the stochastic RSI. K channel is less than the D channel, okay, a point of relief. This means that the S&P 500 is bearish through the stochastic RSI, okay. Divergence is normal, not a problem. Saturation is fine. Volatility is normal, and momentum, okay. Everything else is okay, fine. Now, see guys, the theory is that MACD and the stochastic RSI must be aligned in a particular direction so that the particular stock or a particular index, okay, or a particular commodity or whatever, okay, it can get a defined direction. If the MACD and the stochastic RSI are aligned bearish, then the stock market, okay, it will go bearish. And if the stochastic RSI and the MACD are aligned bullish, then it will go bullish. In a condition where MACD is bullish and the stochastic RSI is bearish, okay, or vice versa, but they are not aligned, in that case it is neutral and anything can happen, okay. It may go bullish or it may go bearish, but the movement cannot be trusted. Whatever is happening, it cannot be trusted until and unless both of these are aligned in the same direction, okay. And also this kind of neutral condition, okay, it cannot allow the stock market to give heavy movement. Technically heavy movements, okay, they are not allowed, right? So guys, on this the weekly chart of the S&P 500, now we are seeing that the S&P 500, okay, it is bullish through the Bollinger Bands, MACD, and okay, what was that? Bollinger Bands, MACD, and the EMA, okay, moving averages. It is bearish through the the Ichimoku cloud, long-term bearish trend, and also it is bearish through the what we say, okay, stochastic RSI. This means that on the weekly chart, S&P 500 is 50% bullish. 50%, 50 to 60% you can say, okay, 50 to 60% bullish. Why not 70, 80, 90% bullish? The reason is that it is still trading below this, the smoke cloud. It is bearish. It is in the long-term bearish trend. So guys, once again, if you have not subscribed to my YouTube channel, then please subscribe to my YouTube channel. And guys, if you want to join my YouTube community in order to get the daily analysis of the S&P 500, then you can join my YouTube community through YouTube membership, and the link is in the description and also in the comment section. And guys, other than that, there is the join button that just below the title of this video. You can also use the join button. Now guys, let's move on to the second point of the agenda. And the second point of the agenda is the S&P 500 weekly support and resistance levels. Let's see that what will be the range, okay, what will be the support and resistance levels for the S&P 500 in the coming week, okay, etc, etc. Now guys, we are here, and this is the second point of the agenda of this S&P 500 weekly technical analysis. And so here we are going to talk about the support and resistance levels for the S&P 500, okay, in the coming week. So guys, in order to give you the support and resistance levels, first of all, you need to understand, okay, from the technical point of view, that a bullish reversal technically, okay, it was supposed to be up to a maximum of 4035, because this is where we have our last technical indicator. Okay, that's it. Beyond that, okay, there is no other technical indicator. And there are back to back 1, 2, 3, 4, 5 technical indicators. So the S&P 500 was supposed to struggle heavily, very, very heavily. It was supposed to struggle, okay, but again, through the manipulation, it was easily able to breach each and everything, okay. But now, because we do not have, any other technical indicator, okay, particularly these are moving averages, okay, the other side, the bull side, okay. Secondly, okay, see, that is not the only thing, okay. The thing is that the moving averages are aligned bearish. Clearly bearish, all of the moving averages, okay, not just the moving averages, but the MACD and the other technical indicators, okay. Because all of the technicals are aligned bearish, there is no other technical indicator, okay, in the bullish side. This means that any bullish retrace or reversal, okay, it was supposed to be up to 4035. Sorry, the zone of 4035, okay, the zone of 4035, and the zone of 4035 is from 4025, okay, just plus minus 10, okay, to 4045, okay, because we need to give a little room to the zone, okay, so that the S&P 500 can move, okay, a little freely, okay, means it can simply fluctuate, okay, a bit. So yesterday we have noticed that the S&P 500, it has hit the upper, or sorry, it has closed at the upper level, okay, of the zone. So this was the reason I mentioned this thing in my previous S&P 500 weekly technical analysis, and also in my S&P 500 monthly technical analysis recent. So, and guys, other than that, if we use the Fibonacci retracement, then you will notice that through the Fibonacci retracement, S&P 500 has already hit, okay, this is the 50% of this Fibonacci retracement level. So as we know that we have the 50% very, very important Fibonacci retracement level, and also the 61.8%, okay, very important Fibonacci retracement levels. These two are the very heavy and very important Fibonacci retracement levels. So at first a reversal comes from the 50% itself, okay, but somehow if the stock market manages, means any index or any stock or any commodity, okay, or anything, if it manages to breach 50%, or breach means close, okay, this is the 50%, in that case it can move up to 61.8%, and then a technical reversal is like 99.99%, okay, it is always there. So as of now, we can clearly see that it has just closed at this 50% level. What we can say here is that as of now, the zone of 4035, okay, it is very, very heavy, and it is still there in the picture. S&P 500 has not yet clearly breached the zone, because see, this is a strong zone in a manner that if the S&P 500 has to this side, okay, the bull side, then it has to give 2 consecutive closings above the zone itself, means above 4045, okay, 4045 or 4047, okay, approximately. Now you might say that the S&P 500 has closed at 4045.65. That is normal. Okay, that's not a problem. 4045 to 4046 or 47. Okay, that's fine. Okay, we have 1 or 2 points. Because see, historically, what has happened? Let me show you. Historically, when we look into the the movement of the S&P 500, then it was where? Yep, this was the zone of 4035. Okay, so S&P 500 moved up. Okay, failed, and then we have seen, okay, this is the decline in the S&P 500, right? Then one day, okay, it moved up. So it moved up because of a technical condition, and also there was a news. Okay, it moved up, it closed, it clearly closed above this, the 4035, and then came the next closing. So two successive closing means that yes, now it is allowed to move, okay, beyond 4035 zone. So that next day it came down, and it was an opportunity. It was an opportunity. Okay, next day there was no second consecutive closing. Okay, and it moved up. Okay, so it was in the short term bullish then. So what I'm trying to say here is that we need two consecutive closings in order to get any kind of non-manipulated confirmation that yes, there is like 1% chance that the S&P 500 can move up. Okay, two consecutive closing. However, as of now, okay, everything is suspicious, and this is what I'm going to clear in the next point of the agenda. Okay, the manipulation. Okay, that thing. So as of now, okay, this is the thing. So we have 4100 4065, and then the 4035, the zone of 4035 itself. Okay, or you can simply see that it came down, and now it has simply retested the 4035. Okay, and now it should come down. Okay, simple. Anyways, then we have, okay, a good support, not good support, okay, but a little support, okay, around 4018. Okay, 4018. Then we have 4007. 4007 is the 200 day EMA. Then we have 3991. Yes, 3991. Okay, it's a good support. It's a good support. Okay. Then we have 3960. Okay, again a good support. Then comes the 3937 zone. The zone of 3937 is going to act as a heavy support. Okay, because we can clearly see it came down, it found support, and then a reversal. Whenever it comes down, it will find again, okay, this is a support here. However, there is a catch, and the catch is that because the S&P 500 has already respected the zone of 3937 once, now it is under no obligation that it should respect the 3937 zone. Okay, the only thing that it can do is that yes, it can respect the zone of 3937 for 2 hours, for 4 hours. Okay, or at most for a day. That's it. Okay, nothing more. But this time it will be able to breach the zone of 3937. Okay, then after 3937, then we have 3900. Okay, but the good one is at 3884. Okay, 3884. Then after 3884, okay, support. Then we have the heavy support, strong support. Okay, at 3840. Okay, now from 3840 to 3790. This is a cushion for the entire stock market. Okay, as such, it is not expected to be breached. Okay, means in order to move below 3790, S&P 500 has to give some kind of hold here, 1, 2, or 3 days. Okay, then only it is permitted to move below this, the 3790. So the next question will come here, okay, from 3630 to 3585. Okay, means after breaching, okay, this is the 3840, 3790. Then the next one, okay, it comes at 3630 and 3585. Okay, so this will be the next question. Now, guys, I have one more the very important information to share with you here, and this is regarding YouTube membership. Okay, YouTube community. So let me tell you that how you can join my YouTube community through the YouTube membership. You can visit my channel, and I've given the link in the description of the video and also in the comment section. So once you visit my channel, then we have this, the join button, JOIN. Okay, join button. So once you click on this, the join button, then this pop-up will open. Now in this pop-up, you will notice that we have these are 3 options. Okay, all midweek updates and daily S&P 500 updates and the updates and opportunities. So these are all midweek updates. It has been discontinued, okay, and it will be removed from the platform shortly. So now there are only these are 2 valid levels. Daily S&P 500 updates means you will get the daily S&P 500 updates, each and everything from Monday through Friday, pre-market update, first, second, third, fourth, fifth, fifth update, okay, and the final update, okay, means each and everything from Monday through Friday, okay. And then comes the updates and opportunities. So the updates and opportunities means that whatever you are getting in the daily S&P 500 updates, you will get, okay, that part, as well as you will get the opportunities. Yes, the opportunities. For example, okay, this kind of opportunities, 5 to 10 opportunities every week. And guys, if you notice that many people have joined my YouTube community for last many months, and they are getting, okay, the daily updates, the daily analysis of the S&P 500 from Monday through Friday, each and everything. So many have already migrated to the new levels, okay, and those who are left, they will migrate soon, because this is the all midweek updates. It has been discontinued and it will be removed from the platform shortly. So guys, whenever you want to join my YouTube community, you can either opt for daily S&P 500 updates, or you can go for the updates and opportunities, okay. So this is the all midweek updates. It will be removed shortly because it has been discontinued. So guys, once you have joined my YouTube community, okay, through the YouTube membership, then you need to visit my channel, and on my channel you will find the tab, community, okay. So you need to click on this tab, and all of the updates, okay, you are going to find here in the community tab only. And if you are using a YouTube app, then you will get the notifications, okay, there in your YouTube app. So guys, once again, I have given the link in the description of the video and also in the comment section. And other than that, you can also use the join button that is there just below the title of this video. So now guys, we are going to discuss the third point of the agenda, and the third point of the agenda of this S&P 500 weekly technical analysis is the manipulation, cause, reason, okay, and the purpose. So first, okay, let's talk about the cause, okay, cause or the reason, okay, that why the market manipulation, okay, it was there in the first place. So this was my pre-market update to my YouTube community members yesterday. So the reason was that it was the Atlanta Fed President Bostic who said that he thinks or assumes that the Federal Reserve will not raise the interest rates by 50 bps. Rather, the Federal Reserve may still go for 25 bps even after the much better than expected and stronger economic data, which is supporting high inflation. So whatever he has mentioned or whatever he has said, it was not supported by the data, right? Anyways, then the Atlanta Fed President Bostic comments were against his counterparts or other regional Fed presidents who have recently said that now the Federal Reserve can go for 50 bps in order to curb the inflation. So they have simply ignored the other Fed president, other regional Fed presidents, okay, that they have said that now the Federal Reserve will go for 50 bps. But they have trusted only the Atlanta Fed President Bostic comments, and then they have manipulated the entire stock market. So this is what I mentioned here, that the so-called comments of the Atlanta Fed President Bostic helped the market manipulators to give a fake and heavy bullish run. It looked like that the market manipulators wanted to have those kind of comments from someone from the Fed so that they can manipulate, and no one can answer their motive or the manipulation. So yesterday the weekly jobless claims and some other data, it was published, and that further confirmed that the inflation is going to move up. Inflation is holding and inflation will move up. So market manipulators simply overlooked that data, the real economic data, and trusted the comments of the Atlanta Fed President Bostic, who was the only one among all of these the regional Fed presidents who have said that the Federal Reserve will go for, who have said that the Federal Reserve can go for 25 bps rather than 50 bps. And the Atlanta Fed President Bostic's comments were against the comments of not just the other regional Fed president, but also the comments of the Fed chairman himself. Because just after the 3 times NFP data, the Fed chairman himself has changed his tone from positive to negative. But just one regional Atlanta Fed President Bostic's comments were taken into account by the market manipulators, and they gave a very heavy bullish movement to the entire stock market. So now I hope that you understand the reason behind this, the manipulation. Okay, now the question is that why the market manipulators are in so much rush, why they are in so much hurry. Now let's talk about the second reason. The second reason, okay, it is there. This is the dollar index. Okay, for those who are not aware of this thing, then the ticker is DXY, dollar index. Okay, now what you are seeing here in the dollar index is, now you can see yourself in the dollar index that dollar index has closed above the Ichimoku cloud in the bullish side, okay, on Thursday. So the market manipulators, they were fearful that if the dollar index closes or gives a second consecutive closing above this the Ichimoku cloud, then it will enter into its long-term bullish trend. Okay, and if you notice that the bond yields are already bullish, okay, are in the long-term bullish trend. And now when the dollar index also align itself, okay, in the long-term bullish trend. So see what the concept says. The concept says that when the bond yield is bullish and the dollar index is bullish, then the stock market is compelled, it is forced, it has to come down, it must give bearish movement, it must come down, because these three, like bond yield, dollar index and stock market, they are not allowed to be or to trade in the same direction. Historically, okay, this is what we have seen, that the dollar index and the bond yield, okay, whenever they go bullish, then the stock market goes bearish. When this goes bearish, then the stock market goes bullish. Okay, so yesterday, okay, the market manipulators, they were in rush, okay, to avoid this kind of situation. Okay, and they did. This means that for a day, okay, 2 or 3 days, they can keep the dollar index here. However, the good thing is that the next week, now the data will be published. The economic data will be published, and the most important data is the NFP data. And yes, this NFP data is exactly, okay, what has compelled, what has forced the Federal Reserve chairman to change his tone from positive to negative in just 5 days. So now I hope you understand that why they were in rush. Okay, this was that point. Now the next and the very good and the very strong reason that why the market manipulators in rush, okay, heavy rush, or why they were in hurry and why they have manipulated the entire stock market in a manner, okay, so that the sentiments can be changed from the bearish to bullish, so that okay, everyone, okay, most likely, so that everyone can think bullish, okay, and so that they can trap. Anyway, so the reason, okay, for this the rush was that as early as on Monday at 10 a.m. okay, the data, what data? The data related to the factory orders, okay, it will be published. Now you will be surprised. Previous month, okay, the factory orders data, it was plus 1.8%, okay, and this time even the market manipulators, even the Wall Street is expecting minus 1.8%. Minus 1.8%. Yes, this is what the Wall Street is expecting. This is what the market manipulators, they know that this is what they are expecting. A heavy decline in the factory orders, further confirming that something is really not good in the economy. Labor market is strong, fine, but at the same time factory orders are declining. Okay, economy is heading to the recession. Okay, so as early on Monday 10 a.m. the factory orders, okay, this is the data, it will be published. So on Monday from 9:30 a.m. to 10 a.m. there will be only 30 minutes. Market manipulators will be having only 30 minutes. Okay, if they want to push the S&P 500 further up, then they will be having, okay, only this the 30 minutes and nothing else. Okay, so this is Monday. Now the best and the real reason why the market manipulators, okay, they were in the rush. Okay, although I have given you these are many reasons, but the real reason is that on Tuesday the Federal Reserve chairman himself is going to testify to the Senate. Okay, then on Wednesday the Federal Reserve chairman is going to testify to the House. Okay, back to back on 2 days, the Federal Reserve chairman himself. And you must know, and you must remember, and you must understand that the stock market fears nothing but the Federal Reserve chairman himself. And this is the true reason. This is the true reason why the market manipulators, they have manipulated the entire stock market heavily. They know that now the Federal Reserve Chairman is going to testify to the Senate and to the House on Tuesday and Wednesday, and the policy makers, they are going to ask him that what is happening, okay, on this economy front, okay, what is good, what is not good, and what are his commitments, what he is or what he is doing in order to bring the inflation down, why he has failed to curb the inflation, and he has to answer to the Senate and to the House. Okay, and this is why the market manipulators were actually in hurry, they were in rush. So what was the purpose? The purpose was to move the entire stock market up in order to change the sentiments from bearish to bullish, and then in order to form a trap, a golden trap or a beautiful trap. Because what will happen that now through these the two candles, the market manipulators have already convinced the retail traders that see that there is no more bearish movement. Okay, rather there is now the stock market has regained its bullish movement. So go bullish, but in actually they are simply trapping the retail traders. Nothing else. They are building the trap because they are very well aware of the fact, and this is why they are in the rush. And as I often mention this thing to my YouTube community members, that whenever there comes a trap, then convert the trap into the opportunity. Okay, so there is a trap. Yes, let them trap. No problem, no problem. You have missed the one candle, no problem. You have missed one candle, no problem. You have already made profits. Okay, back to back 4 candles, then 3 candles. Okay, then here. Okay, missing one or two candles, not a problem. This is not the end of the trading, okay, or the world. If you are making like a profit for continuously for 4 or 5 days, and if you are not making profits, or if you are not trading for one day, okay, then that's okay, that's normal, okay, no need to lose your heart. So now the market manipulators, they are going to build the trap, and this is exactly when you must convert the trap into the opportunity. So as early as on Monday, if not on Monday, then Tuesday, Wednesday onwards, okay, this is going to come down. And guys, there is this one more thing, okay, on Saturday, okay, at 1 p.m., Saturday at 1 p.m., San Francisco Fed president is going to comment. But eventually, see, whatever the regional Fed presidents are saying from Atlanta, okay, or from San Francisco, or from New York, okay, or from Chicago, okay, doesn't matter, because finally the verdict will come from the Federal Reserve Chairman himself. Okay, whatever he says is final, and he will come into the picture on Tuesday and Wednesday. So guys, now I hope you understand the cause, the reason that why the manipulation has happened, and the purpose. Guys, once again, if you have not subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you want to join my YouTube community in order to get the daily updates, the daily analysis of the SP 500, as well as the opportunities, then you can join my YouTube community through the YouTube membership. And I've given the link to that in the description of the video and also in the comment section. So guys, now let's move on to the next point of the agenda. That is the fourth point of the agenda, which is the S&P 500 technical analysis on the daily chart. Okay, so now let's see what is happening on the daily chart, how the S&P 500 is moving on the daily chart. Now guys, we are here, and this is the fourth point of the agenda of this S&P 500 weekly technical analysis. So guys, technical analysis, okay, let's keep it plain and simple. First comes the candle itself. Okay, candle, it's a heavy bullish candle. However, the closing of the candle is not the absolute high, okay, but it was just near to the high. Okay, this simply indicates bullish sentiments. Not the long term, not the short term, but the immediate bullish sentiment. That's it, and nothing else. Okay, now let's see what are the technical indicators are saying. First comes the Bollinger Bands. This is the median of the Bollinger Band. This is the lower band of the Bollinger Band. Because the S&P 500 is still trading in between the lower band and the median of the Bollinger Band, this means that the S&P 500 is bearish through the Bollinger Bands. Clear? So the second technical indicator is the EMA, exponential moving average. Okay, or these are the moving averages. If you notice a confirmed crossover, bearish crossover, okay, in the bearish crossover supporting a bearish trend. Secondly, clear fan out supporting the bearish trend, and now the S&P 500 was able to close above these the moving averages. This means that as of now, moving averages will be counted as neutral, not bearish but neutral. Okay. Then comes the Ichimoku cloud because the S&P 500 is still trading above the Ichimoku cloud. This means that the S&P 500 is clearly bullish through this the Ichimoku cloud, right? Now comes some other technical indicators. First comes the MACD. If you look into this, the MACD is the moving average convergence divergence. Okay. So now the MACD is saying, see, first of all, the MACD is less than the signal. This means clearly it is bearish. Number two, the MACD is negative, okay, and the signal is positive. But now the signal is nearing to the negative levels. As soon as it gets negative, okay, and it can be negative, okay, on Monday. Monday there are not much chances, okay. Only if there comes a heavy, okay, bearish movement, then otherwise on Tuesday, okay, it is expected to go bearish, negative. So MACD is negative. Signal, once the signal will become negative, a heavy fall. Remember, a heavy fall. They have pushed the S&P 500 like to 2.5%. Then there will be a fall of 2% to 3%. Okay, one candle will be enough to complete. Okay, to cover this the entire upward movement. So most likely, okay, if there comes a good red candle on Tuesday, okay, then it should happen. Okay, and yes, Tuesday, okay, the Federal Reserve Chairman, okay, he will testify to Senate. Okay, so Tuesday or Wednesday, let's see. Okay, when exactly it becomes negative. But if you are my YouTube community member, okay, if you have joined the YouTube membership, okay, then I will inform you and I will tell you, okay, that when exactly this is happening, okay, so that we can plan our bearish trades with confidence. So now comes so through the MACD, S&P 500 is clearly bearish. Now comes the stochastic RSI. K channel is more than D channel, but both are still below 50. Both are still below 50 means still it is trading in the bearish territory. Okay, what it means? It means that yes, S&P 500 may look like that the S&P 500 is bullish through the stochastic RSI, but at the same time, okay, it is bearish. This means that we are going to consider this as a weak bullish. Okay. Then comes the divergence is normal, saturation is fine, volatility is okay, and the momentum is fine, everything. So now guys, what we are going to see here is that the S&P 500, okay, two bearish, one neutral, two bullish, not actually two bullish, but one bullish, okay, because stochastic RSI, we can again count it as neutral, okay. So this clearly means that the S&P 500 is now 80% bearish. 80% bearish on the daily chart. Okay, this is technical thing. So this is through the technicals. Okay, it is 80% bearish on the daily chart, right? So guys, now comes the time to discuss the probable movement of the S&P 500. Okay, the real thing. Okay, the trap and the opportunity. Okay, these things. So guys, once again, if you have not subscribed to my YouTube channel, then please subscribe to my YouTube channel. And you can join my YouTube community through the YouTube membership in order to get the daily updates and the daily analysis of the S&P 500 from Monday through Friday. And I've given the link in the description of the video and also in the comment section. So guys, now let's discuss the fifth point of the agenda of this S&P 500 weekly technical analysis. And the fifth point is the probable movement of the S&P 500 for the week of March 6th, 2023. That is from March 6th, Monday to March 10th, Friday. Now guys, we are here and this is the fifth point of the agenda. Fifth point of the agenda of this S&P 500 weekly technical analysis. Okay. And here we are going to talk about the probable movement. Yes, the probable movement of the S&P 500. That what is going to happen in the S&P 500 from Monday through Friday. Okay, Monday is March 6th and Friday is March 10th. So what is going to happen from March 6th, Monday to March 10th, Friday? Okay. So guys, again, a few things that you must remember. Okay, number one is that on Monday, okay, 10 a.m. Eastern time, Monday 10 a.m. Eastern time, US, the data okay, related to the factory orders, okay, it will be published. And as I mentioned earlier, okay, in the third point of the agenda, that last month it was plus 1.8%, but this month the Wall Street is anticipating, and the market manipulators, they are anticipating minus 1.8%, okay, a significant decline in the factory orders. So this is the primary factor. So as early as 10 a.m. Eastern time, US, on Monday, okay, we can see, you know, some disruption, okay, in the entire stock market, okay, but that will be based on the number, okay. If the number comes like minus 1.9%, minus 2%, okay, minus 3%, okay, so that will simply means that that will simply say that now the factories are not getting, you know, that much of these the orders, okay, means something is not good. And also at the same time, that will say that because the factories are producing less, people have the money to pay. This means that the prices will remain elevated. This means that the inflation will further move up. It will go bullish. It is not going to come down. Okay, so this is the cycle. Okay, this is how, okay, it impacts. Anyways, so the real number, okay, we will see what is it, okay, on means what is the real number, okay, is on Monday, and I will inform you, means my YouTube community members, okay, through the. So I will inform you, okay, in the first update, okay, once the data is published, that how much, okay, is this the data, what is the variation, okay, and now how it is going to impact, okay, this the movement, okay, on Monday. Anyways, that is the first part, okay, clear. Number two, the second point is the Federal Reserve Chairman. Federal Reserve Chairman is going to testify to the Senate, okay, on the economic matters, including the inflation and what are his goals. Okay, now what he thinks after, okay, after this the 3x NFP data, then there was much better, okay, CPI, much better PPI, PC, all other economic data. So now what he thinks, that whether he is still assuming or he thinks that the inflation will come down, okay, even the data is against okay, any decline in inflation, and he's going to say, just like the European Union president has said, that the inflation will remain on the elevated levels for many months. Any negative comment, including the negative tone of the Federal Reserve Chairman on Tuesday, will simply give a heavy bearish movement to the entire stock market. Whatever the market manipulators have gained, okay, and they are building this the trap here, so they will lose everything. Sorry, no. They will not lose everything, okay, because this is where they are going to make money. So they will simply sell everything, okay, and this is where the retail traders are going to lose everything, okay, because for now the like 99% retail traders or 99.99% retail traders are convinced that now the entire stock market is going bullish, but it is not. And I gave you the reasons, okay, that these are the reasons why, okay, why it is not a bullish market, but it is a bullish trap, okay. So they will then sell, okay, and then they are going to make the market manipulators are going to make make this a lot of money, okay. And at the same time, okay, we will also try to capture this opportunity, okay, means convert trap into opportunity, okay, remember this, okay. We will also try to capture this opportunity. So that is that is Tuesday. Now comes the Wednesday, okay, that is the point number 3. Wednesday, again the Federal Reserve Chairman is going to testify to the House. On Wednesday itself, the data, the ADP data, the unemployment data, okay, this the employment related data, okay, it will be published, okay, even before, okay, he speaks. This means that data can help. This means that if that data further confirms the rise in the inflation, then on Wednesday, okay, if he has missed something on Tuesday, then he will have to consider that part on Wednesday, okay. So next week, okay, it is so next week is really going to be, okay, very exciting, okay, in terms of the economy, in terms of the movement of the stock market. Every day, okay, something new will happen, okay. So So if you are my YouTube community member, okay, then definitely, then be ready to get, okay, these are back to back, okay, updates, okay, many updates, multiple updates, okay, within a day, because this is going to be an exciting week, okay, every hour or every 4 hours, okay, something new will happen, okay. So let's see. Anyways, then comes the point number four. Okay, point number four. Okay, on Thursday, the weekly jobless claims data will be published. And also, one of the Fed governors is also going to speak, okay, on Thursday. But by the time he speaks, the Federal Reserve Chairman, okay, has already spoken, okay, on Tuesday and Wednesday, and also, okay, some other economic data is now in the picture. Okay. Then finally comes the fifth point in the picture. Okay, that is the Friday. On Friday, the monthly, okay, the non-farm payroll data will be published. Okay. So non-farm payroll data last month, it was approximately 550,000, I guess, or 520,000 or so. Okay. This week, let's see, or sorry, for this month, okay, we will see that this the new data is saying, whether there is any significant decline, and if not, and if the data says like 400,000, 450,000, 500, anything, anything beyond 500,000 means a heavy, not heavy, but a very heavy fall. Okay, and it's not just about 500,000 or anything above beyond 500,000. Okay, we also have, okay, this is the 400,000, 450,000. Okay, that also means that labor market is super strong. People are getting the jobs, people have the money, and the shortage in the factory orders, okay, or the decline in the factory orders is further going to keep the inflation high, because producer will ask for more price, okay, for their produce. And the people, okay, they are getting the job, they have the money, and they will pay that the price. Means the inflation will further move up, and it will not come down. Okay. So now I hope this scenario, okay, this next week is absolutely clear. Okay. Now we are clear, okay, on those points. Now comes Monday, because S&P 500, first of all, S&P 500 is still trading, okay, in or around the zone of 4035. Okay. And this is at most, okay, it was expected to trade, okay, around, means maximum to this one. Okay, this is what I mentioned, that from 4009 to 4035, this can happen, but not without manipulation. Manipulation must be present in order to see a movement beyond 4009 to 4035. Okay, but beyond the zone of 4035, this is pure manipulation. Okay, there is no technical, okay, no support and nothing, right? This means that on Monday, market manipulators will be having, okay, only these the 30 minutes, 30 minutes from 9:30 a.m. Eastern time to 10 a.m. Eastern time. Okay, because at 10 a.m. Eastern time, the factory orders data will be published. Okay, if the factory orders data comes against what the market manipulators or the Wall Street, okay, is expecting, then on Monday what will happen, that they will not be able to push the entire stock market, okay, in this the upward side, because in that case the newest data will simply deny that that kind of upward movement, right? So this means that the comments of the Atlanta Fed President Bostic, okay, are not going to help the market movers anymore, because now the new data will be there. So this means that on Monday we can expect a limited movement, a very, very limited movement. Limited movement means, see, immediately technically we have 4065. Okay, this is our technical resistance level. See, I'm not talking about the technical indicators, because technical indicator market, the S&P 500 has already breached all of the technical indicators. I'm talking about the technical level 4065. Okay. So 4065 earlier, okay, there was some good movement, okay, around this the 4065. So in these the 30 minutes, if the market manipulators want, okay, they can push the S&P 500 to this the 4065, or even they can give a gap up open, okay, towards or around the 4060, 4065. Okay. But gap up open of like 1-2% gap up open, no, that is impossible. That is not possible. Okay, especially in the case of S&P 500. Okay, but if they want to give a heavy gap up open to the Apple, Okay, because Apple is a stock, okay, and stocks can be easily manipulated, so they can, okay, that's not a problem. They manipulated, okay, a lot of times earlier, and still, okay, they can manipulate. Okay, nothing new. So as of now, let's stick to the 4065. Okay, but that too will be intraday. Now it all will depend on this the factory orders data at 10 a.m. Eastern time US. Okay, that what is the real data. If the real data comes in line as with the expectations of the market manipulators, okay, minus 1.8% or somewhere around that, okay, then also there is no reason that the S&P 500 should move up. No. If the factory orders data, okay, comes anything in positive, okay, positive, then only they can push the S&P 500 for the up. Else, no. Okay, so factory orders, okay, that kind of data, and then okay, this is the manipulation, everything. So everything is saying that on Monday also S&P 500 must hover around the zone of 4035 to the zone of 4035. Okay, at most, if it want to, or if they want to create more panic, or not panic, but if they want to create FOMO, okay, this is the FOMO thing, okay, among the retail investors, retail traders, then yes, okay, they can push the S&P 500 further up to 4065. Okay, and then they will convince the retail traders that now see that back to back heavy bullish candles, it is going bullish towards 4200, 4500, and the retail traders, okay, they will agree to them, because the same information will be published through all of the news channels and all of the news websites. Okay, these are news portals. Okay, and this is the well-known manipulation technique. I've already discussed this many times. Okay, so they will feed this information, okay, to the entire market, that see this is happening, and go bullish. So what will happen, that when you go bullish, okay, and they will keep it, okay, on these elevated levels, then you will notice, and okay, or you will think that yes, now you are making profits, and it is going bullish. Okay, no problem, they can keep it bullish. They can keep it green, okay, or they can keep it like some small candle, okay, on Monday. But then on Tuesday, okay, when the Federal Reserve Chairman himself comes into the picture, okay, that is the time. This means that on Tuesday, okay, it will come down. So by the time the market, so I'm not saying that it will come down on Tuesday itself. No, it can come down on Monday itself. See, all these the market manipulators, they care about this the volume. So once they have the enough volume from these retail traders, enough volume. So guys, these are market manipulators. Okay, they are looking for the volume. They care about the volume. Okay, once they get the volume from the retail traders, once they are able to convince the retail traders, they get the volume. Okay, in the shares, or in the futures, or in the options. Okay, from these the retail traders. Okay, then that will be the time. Okay, they can go bearish. So they will not wait for the Tuesday. They will not wait for some special candle or something. No. Once they see the volume is there, the volume has been accumulated, then they will simply give a bearish movement. So on Monday, okay, what we can expect is that irrespective of anything, okay, I think that the market manipulators, okay, they would like to hold. Okay, one heavy candle, two heavy candle. Now they would like to give a hold to the entire stock market, okay, to the S&P 500, because now they are already exposed, okay, to some level. But if they further manipulate on Monday, okay, in that case, again, see, intraday, okay, a little bit they can give an upward movement or so, okay, in order to trap more retail traders. Okay, but again, okay, they would like to go for, okay, this the hold, okay, and then they will show that they are clean, or later in a day they can give this small bearish candle, okay, a small bearish candle. But again, now whatever was acting as a strong resistance, okay, is now going to act as a support. So these are moving averages are going to act as a support, means 40. So 4035, okay, it is already in the picture. Okay, then we have 4018, okay, 4007, okay, so it will be back into this the picture. And also this is in line with our expectation that the zone of 4035, is indeed a very strong resistance as well as support zone, and it must be respected no matter what. It must be respected. Okay, respected means that the S&P 500 must spend 1, 2 or 3 days, okay, around or at or in this zone before it can give, any kind of movement. Okay, and this was the first day. Okay, right. This means that now the second day on Monday, okay, any movement, okay, around or in this the zone. Now comes the real picture, okay, and that picture is on Tuesday. Now on Tuesday again, market manipulators okay, will have this the time from 9:30 a.m. to 10 a.m. Eastern time US. Okay, so only this the half an hour. They will be having only half an hour on Tuesday, because at 10 a.m. Eastern time US, Federal Reserve Chairman will testify to the Senate. Okay, and once he started to speak, then the entire stock market will dance. Then the entire stock market will give, okay, that kind of movement. It will be forced, it will be compelled to give that kind of movements. Or you can simply say that the show begins at 10 a.m. Eastern time US. Okay, simple. So again, an interesting week, exciting week. Okay, now Monday, Tuesday. Now Tuesday, whenever it comes down, okay, this time it will be able to hit and breach the Ichimoku cloud. Okay, if not on Tuesday, then on Wednesday. Okay, so back to back we have this the Federal Reserve Chairman. Okay, he will testify to the Senate and to the House. If he confirms that Federal Reserve is going to raise the interest rates heavily, and they need to act heavily and they need to act aggressively, in that case definitely there will be a very heavy movement on Tuesday. Okay, kind of candle you can expect where the closing will be equal to the low. Okay, closing is equal to the low, and then on Wednesday a gap down open and again a fall, then fall. Okay, simple. Because in that case, the entire stock market will not wait for his comments on Wednesday, because he has already cleared his intention on Tuesday. Okay, so now they will simply sell. Okay, so even the market manipulators will not be able to hold this the entire stock market, because in that case the selling will come from all around the globe. Okay, in that case, because the market manipulators, okay, see, they can manipulate with a few $billion, okay, but they do not have hundreds of billions of dollars or trillions of dollars, okay, that is there in this the global stock market, right? So when the selling begins in the global stock market, like Asian stock markets and the European stock markets, then the market manipulators in the US stock market will be compelled to sell. And because we are talking about the technicals, so last time the Ichimoku cloud and this the zone of 3937 has played their roles. Okay, they have given this the one-time support to the S&P 500. This time they will not. They will not, because they are under no obligation to provide any kind of support. They have already supported once. Done. That is done. Now this time when it will come down, then now this time it will be having very good, very high potential to come down to this the 3840. Okay, and then there is a heavy cushion from 3840 to 3790. Okay, so a fall up to 3790 will be in the picture. Okay, without any doubt. But a reversal will also be there in the picture. Okay, as soon as it enters into this the zone of 3840 to 3790, this is a 50-60 point zone. Okay, as soon as it enters into the zone, okay, we can expect a reversal. Okay, so let's see when that happens. Okay, and the reversal will come, okay, probably like from what particular point and to what particular level. Okay, so again I will tell you, means to my YouTube community members, okay, that what we can expect, okay, kind of reversal and when exactly. Okay, because some of the technicals must also support the reversal. Okay, it is not like that that it will hit this the cushion, okay, this the boundary and then immediately a reversal. No, on the lower level time frames also, okay, it must give some technicals, and then that particular level, for example, it may be like 3810, maybe like 3805, maybe like 3821. Okay, anything. Okay, that we will come to know on that day itself, right? So this is there. Yes, this is there. And yes, now the most important part is that once there comes two consecutive closings below this the Ichimoku cloud on the daily chart, then it will then resume its long-term bearish trend, okay, without any more, this what we say, any more chances of seeing, this the short-term bullish trend, okay. A few reversals will be there, no doubt. A few reversals will be there, okay. But in that case, any reversal will be then limited to the 3991. That's it, because we have the Ichimoku cloud. And that is exactly what I mentioned in my S&P 500 monthly technical analysis. And when it comes down, okay, to this the 3790 and below 3790, then this will be gone. Like this, the 3991, it will be gone. Then the new resistance will be, okay, here, okay, at this the zone of 3840 itself. Okay. So these are resistance and support levels. Okay, they will shift based on the movement. Okay, but yes, we know that what will be the limit. So guys, this week will be interesting, exciting, okay, and a lot of things are going to happen in this the week, okay. And once again, okay, Monday, okay, this is what is there, okay, in this the picture, and okay, 30 minutes, Monday 30 minutes, Tuesday 30 minutes, okay, initial 30 minutes that will be there, okay, and then the comments of the Federal Reserve Chairman, okay, on Tuesday and on Wednesday. And yes, there is this the one part, okay, if somehow, okay, although I don't think that the Federal Reserve Chairman will say, okay, but if he says something like positive as in, for example, if he says that the recent data indicates that the inflation, okay, it is moving up and it is on these the elevated levels and will remain on the elevated levels, okay, but at the same time, okay, we are expecting that with this the 25 bps or the 50 bps, okay, this inflation, okay, it can be controlled, okay, means some kind of this the wording, okay, some kind of wording that gives some relief to the the stock market, okay. In that case, yes, in that case we can expect that the market manipulators has the potential to give a push towards 4100. But once again, anything beyond the zone of 4035 is 100% pure manipulation, not technically supported. Now, because this week will be very exciting, okay, and very interesting, okay, and it will be a busy week, and it will be a busy week for all of us, for me and my YouTube community members, okay, because we need to, okay, look into this, okay, each and every day, okay, multiple times, okay. So in this the multiple time frames, because a lot of things are going to happen. And we need to make sure that whenever, okay, this trap is identified, okay, and the initial signs of, okay, or this that the S&P 500 is giving up, okay, then we should enter into this the trade, okay, on this the bearish levels. But if there comes some signs that the S&P 500 can further move up, in that case, okay, we will wait, okay, until it hits the 4100. Or if you want to participate in that case, you can capture this from the zone of 4035 to 4100. Even though it will be manipulated, okay, I do not recommend. But if you want to, then okay, then I will tell you that if that is happening, okay, so that you can go bullish here and then sell here and then take, okay, a long bearish position here down, or you can take a long bearish position here and then it will be down, okay. So guys, once again, whenever you want to join my YouTube community through YouTube membership, in order to get the daily updates and the daily analysis of the S&P 500, as well as the opportunities, okay, then I've given the link in the description of the video and also in the comment section. Or you can simply use the join button that is there just below the title of this video in order to join. And guys, if you have any questions that you want to ask, okay, any kind of questions, okay, whenever you want to ask any kind of questions, please feel free to comment and I will answer to your questions. And guys, once again, if you have liked this video, then please hit like. And if you have still not subscribed to my YouTube channel, then please subscribe to my YouTube channel and click on the bell notification icon. So guys, this was my S&P 500 weekly technical analysis for the week of March 6th, 2023. That is from March 6th, Monday to March 10th, Friday.